Perhaps we'll start at the far end. Just a quick intro, please. Do you want to let us know your background and what brings you here today?
Hi, I'm the founder and CEO of Glint, a multi-currency platform that has a unique ability to use gold as money. I'm not from the financial services industry at all. I came from the digital background.
Closer. On your chin. Is that enough?
Yeah. I think that's enough to say.
Yeah.
Hello, my name is Arifa. I'm the CEO and founder of Himalaya Capital Exchange. We're trying to build an alternative stock exchange which runs entirely on smart contracts. I famously founded Fintech Storm several years ago, and we used to host panels with Fintech CEOs all the time, and prior to that I was an investment banker. I have followed the journey of Fintech revolution and have been quite fascinated with it, and finally have come to believe that blockchain and cryptocurrencies are the epoch of fintech.
My name is Toby Unwin. I'm co-founder of Premonition. Premonition does something very interesting. We know which lawyers win before which judges. We have the world's largest litigation database, and we call this a very, very unfair advantage in litigation.
All right, hi, so I'm Eddie George, and I'm the founder and CEO of New Finance, which is a business network for finance and technology professionals. My personal is, I've been around for about 30 years in the fintech scene. In finance and tech, working banks, it's now very trending called fintech. It was once just called tech. That's me.
Well, just to repeat, in case you didn't hear earlier, I'm Steve Plant from WhichFX.
Perfect. So it's tradition for those of you who've been to these We Are Fintech meetups before that the beginning question is always just to try and get a better sense on what really excites the people we have in front of us. So the question is always not allowed to answer this with either your own company or your own children. What is the coolest thing you've seen in the last year?
Well, I've got to go with those exhausts that make a spitting sound when people drive along the road. The only problem is with them, I do actually want to remove them and surgically insert them as well, but that helps from having a dental background, of course. I do actually know which end it goes in.
So for me, the big change is data, basically. It's big data, machine learning, AI, that's the killer app for fintech or for finance and other industries.
A tough question because it's broad. I guess anything that Elon Musk is doing is usually pretty interesting.
I think cryptocurrencies are the coolest thing of last year, and also market networks and platforms.
I think the coolest thing I've seen recently is the sheer number of really talented young people coming into the fintech industry, and I'm continually blown away by the excellence that is coming through.
Brilliant, brilliant. Thank you very much. So just to tee things off as well, it's quite nice if we get grounded that we're all talking about the same thing here. So unicorns, valued at $1 billion, and they got to that valuation very, very quickly. Does anyone want to build on that definition or challenge that in any way?
I think what's quite interesting is the nature of the word startup in that definition, because how long can you be a startup? That's the kind of question I often have.
I always wonder if there's a little bit of the emperor's new clothes here, and people get carried away quite unnecessarily with investments. I mean, $1 billion, wow, that's a lot of money. I couldn't tell you actually how much that's stacked up on the fronts and game.
I think the cycle from startup to unicorn has startlingly shortened, and also the network effects that magnify a startup's growth to become a unicorn have become phenomenally large.
Yeah, I mean, you mentioned speed. I don't actually think that necessarily has to be a component. A lot of the times it is, but it's not a defining part of it. There's another part, is that you have to have actually raised a significant amount of money at $1 billion valuation, or it's not there. I know that Eddie has a couple of thoughts on this.
Okay, so there are, what you have to understand is there are different ways to value companies, obviously. And so a unicorn that's raised, a bit closer, a unicorn that's raised 100 million on $1 billion valuation, and sold 10% of shares. A company's house, they're probably loss-making. They certainly don't have the revenues to generate to justify $1 billion valuation. So that's one way of looking at it. It's basically based on the investor's perception of future revenues which haven't yet arrived. So when you value something, you have to think about, if you value gold, there's a very liquid market for that. You can get a kind of price, and that price represents the majority of people in a large market who will give you money for that gold and so on. You can say that's probably what it's worth. It's very subjective. When you're valuing based on the next 3 years' revenues that haven't materialized yet because you haven't got a product yet, that's a very, very subjective thing. So unicorn is a very subjective thing. If you've got 100 million in the bank and you're burning cash and making a loss, how are you worth $1 billion?
I can take that if you want.
Sorry?
I can take that if you want.
Okay.
Okay, so if those of you who recall the e-commerce era, we used to equate eyeballs to valuations at that point, which we thought was ridiculous. And the modern equivalent of that is the unique number of visitors and whatever else you have. So the recent example I can cite is Telegram. Those of you familiar with the Telegram app, just because it has millions of users, it was able to raise billions in a matter of days. So actually traction and the users that visit your app or product or platform equates to valuation regardless of any other metric, regardless of the funding you've raised, regardless of revenues, potential for profitability, regardless of who is backing you, and so on.
Sure, but that's just one thing. It's a subjective. To some people, eyeballs are valuation. That's fine. In accounting terms, if you've got 100 million in the bank and you've got none of those revenues yet, you're worth 100 million. That's what your balance sheet's going to say. It depends on how you value it. So I think, it is a subjective thing to decide what that company's worth when it hasn't yet generated those revenues and may not even have the product yet. So, and I think eyeballs is just another subjective measure. To somebody, they might think, you've got hundreds of millions of eyeballs, someone's got a metric, someone says, I think the company must be worth X. And that's fine, but it's subjective.
Yeah, the same company can be worth very different amounts to different people. And we had a 100 mil seed round at Premonition, which is one of the highest of all time. And we were like, oh, well, that's really high. Actually, we had some people that offered higher, but we didn't like the terms. Whereas if you turned around and you asked, say, a lawyer what Premonition is worth, they'd get really pissed off and tell you it's worth nothing. So the same thing can have completely different valuations, and at the end of the day, it's what someone is willing to pay for it, and it's not necessarily what the majority of people are willing to pay for it, because I care about who gets it, not who doesn't.
I think it's interesting that recently, with a number of fintechs being valued in the 1.5, 1.7 billion dollars, and people have had a bit of eyebrow raising going on. Actually, when you break it down per client, it's only about £500 per client. If you look at the market cap of many of the banks, I don't know about the bank we're in right now, but actually it's about 5 times that. So there's still a lot of market value to be had from those fintech companies. So I think it's going to be interesting to see what happens over the next couple of years.
I want to mention one interesting anecdote about the valuation of Uber. So this was a famous argument between the venture capitalists that backed Uber at billions of dollars when all of us normal people thought it was ridiculous. And a famous professor called Ashwath Damodaran, who was from New York Stern Business School, who was the guru of valuation at that time, the traditional equity valuation. So Dr. Damodaran argued that by whatever means you value Uber with cash flows and net present value of discounted cash flows and so on, he was only arriving at some 13 billion or so, and at that time the VCs had already funded Uber at a valuation of $25 billion. So they were at loggerheads, and Damodaran challenged the VC, and the VC told them, there is something here that you don't know about and you don't understand thus far, and that factor is called the network effects. So we can discuss more about the network effects later. But the VCs were proved right. So Uber was the first one to go on and build the network effects, and it became a platform monopoly, bringing the two sides of the marketplace. And because it was a monopoly, it became unreasonable for the users or the drivers to go to any other platform. So these network effects further aggregated the dominant position of Uber, and therefore whatever valuation the VCs had put, it became even higher. So the VCs were proved right and Damodaran was proved wrong. And now we are seeing an even further effect, which is the compounding of network effects with something called the market networks. So this is a phenomena we still haven't seen. So just like network effects were a phenomena at that time of Uber, which was a strange phenomena, we are yet to realize this new phenomena called the market networks, which are about to be unleashed upon us.
Cool. So while we're on the subject of valuations, any questions out there specifically about valuations? Great. One over here. 1 second.
I think somebody said it recently, network effects can work in both directions, just like your investments can go up and down. So it's just as easy to go from 2 billion to 0 as it is to go from...
There was an article in the Sunday Times about FanDuel, where it's just been sold, and KKR forced along the sale through drag-on rights. So when you have preference shares and drag-on rights, the value actually is irrelevant. It's really, the relevance is the control and the conditions, that ultimately dictate what the value will be in the event of a sale, depending on who controls that outcome. So it's really not about the value, it's about the ultimate outcome and the control. And yes, getting money helps you build that value through those network effects, but there's other elements at play, including the long-term sort of governance. And just a shout out for something called Zebras Unite, which is all about a different movement, which is a kind of counter to the unicorn, we need $1 billion valuation. It's about how do you build steady, how do you build intelligently, how do you build with long-term real potential rather than a quick flip, which is often the sort of motivation between unicorn valuations.
All right. Any other questions on valuation lurking outside? Cool. Come on over. With this last question on valuation, then we'll move on, I think.
Hey, you all spoke about network effect and different sort of small-scale micro impacts of businesses, but obviously one of the major effects of asset prices at the moment has been low interest rate environments. As an investor with large amounts of capital, it doesn't matter what asset you hold, whether it be Telegram or whether it was WhatsApp or any cryptocurrency, for example, with a risk-free rate, has a massive impact on valuations. And I think risk-free rates have sort of been misguided at the moment when it comes to valuations. If you're a traditional value investor, your concept of what the risk-free rate is and how you use that to apply valuation has changed for a lot of people. Me as a younger investor, for example, that might be different to someone who's been in the sector for a longer time. So I look at things at a more short-term horizon and making returns on that. I'm not too sure how that would affect your valuation perspective as well.
Anyone want to pick that up? Sorry, you wanted to answer that, and then...
Yeah, I think that effectively the kind of distortion in the monetary system, something that here at Glint we're very interested in because it does affect savers, is creating a whole load of inappropriate investments as well. I mean, we are 112 months, I think it is, since March 2009. We're only 2 months away from the longest economic expansion since the war. So I think there's definitely a word of warning to go around in terms of how long that free ride's going to last.
Eddie, you wanted to...
Okay, so just, sorry, two things very quickly. So your point about the market's very right. Most of these valuations, which are very high, this is your unicorn, are based on somebody's opinion today of what the market's going to do. It's a future, it's a belief of the market today and their understanding of it. So it's pretty subjective. Coming back to your point on markets, when you exit, that's when you really know what it's worth because people pay you hard cash. So right now today, you issue 10,000 shares, you sell 1,000 to someone for 100 million, you've got a unicorn. But nobody's going to give you $1 billion for that company because it's got 100 million quid in the bank, and they wouldn't give you half price, they wouldn't give you 50% off. There's no way, because it's still not worth even half of what you say it's worth. Because if it was, I'd have a very good way for taking £1 and turning it into £5 by issuing 10 shares, one to my mum for £1, I've got £10, I'll give it to you for 5, bingo, I've got this brilliant money-making idea. But another way to value this, which I use to make fun of people generally, unicorns, is you've got 100 million, and that company, that investor wants a 10 times return. So they want $1 billion back. You've got a company with an accounting value of 100 million. You now have to generate 9.9 billion pounds worth of value to sell on the market to generate the 10 billion required to give the investor back the 10 to 1 billion. Think about that. So you're minus 9.9 billion down at this point. Think of it like that. In terms of value creation as an entrepreneur, you now have the burden, a value burden of 9.9 billion. You need to come up with a 10 billion exit. You've got 100 million in the bank. So you're actually at minus 9.9 billion, not plus 1 billion. So there are other ways to look at this, but that's the truth, because you have to essentially float that company for cash at the 10 billion level. That makes sense?
I'll give you a counter example to that, which is the valuation of WhatsApp and Instagram. So for strategic investors, Facebook, for example, or Microsoft, which acquired LinkedIn, for example, for them, the value of the acquisition is far more than any other counterparty can value in the market, because their network effects will just go beyond the scoreboard, and they have the market dominance and monopoly and stuff. So those kind of effects, which are unique to particular players, potential acquirers, are beyond comparison, and which is why the valuations have been skyrocketing, and we have been at odds to justify those valuations, because as normal people, that's not the value for us, but it is of that value to somebody, because their combined forces would take on the world, and they have a long-lasting dominance.
I mean, that may be how you achieve your 10 billion exit, by selling to a Microsoft or somebody who's got 2 billion customers, for sure. But as the entrepreneur, when you get your 100 million in first, you've still got to come up with that strategy to get to that 10 billion. And if you can achieve that through doing it with Facebook with their 2 billion users and as a strategic investment, sure, great. But if you can't, you've got to find a stock market or a trade sale that are going to give you that kind of money, to give your investors back what they expected, to give your team the return on the options that they have, and so on and so forth. So, just because you've got a paper value of $1 billion, you can still be pretty nervous about that, because you've got a lot of value to create before you walk out the door.
Sorry, the point I made about FanDuel is the founders were completely wiped out. KKR got the money back by forcing the sale for 250 or 350 million, but ultimately the founders and all the existing seed investors were wiped out because of tag-along rights and preference shares. So, like you say, it really is, it's what you sell and who has the control to make that sale.
Could I interrupt Steve? If you could put your hand up, just because otherwise other people can't benefit from your wisdom. Great, is this on valuation?
Yeah, I just want to answer.
Cool.
I just want to quickly answer that gentleman's question, because obviously I don't think it was mixed up. You're quite right. VCs and angels don't take into risk-free rates at all when it comes to valuing companies. I think it's the behaviour of the asset. So companies with traditional markets, we can calculate and we can hedge, because we've got instruments like the VIX. We can work out volatility, right? And we can work out a risk-free rate based on a portfolio and things like the Sharpe ratio. When it comes down to companies, it is completely, as someone said, it is a matter of perception. So a VC will not, he'll look at traction and look at your growth rate and look at your NPV value, what's going to happen in the next 12 months. But he's not looking at risk-free rate. He doesn't, that's a different kind of a combination for him. So he's not, VCs aren't traditional market makers like myself. They look at it can be different. So it's the behaviour of the asset which is more important, and how the asset behaves in the future, which you should focus on.
All right, thank you. So I'm going to try and bring it back to our question. Do you remember what we're here for now?
Bringing unicorns.
The next FinTech unicorns. One of the ways I thought we might approach this is by asking our panel about who's got the smartest money out there. So who is investing best? Be interesting to see who it is, get some names that we can follow up on ourselves and see, take an interest in where the smart money is going. So I'd love to put it to the panel and say, who do you think's got the smartest money when it comes to investing in FinTech, and where are you seeing that going?
Hi, I think to be a unicorn, often you have to be one of those 0 to 1 businesses that get talked about. Now, a 0 to 1 business is very contrarian. I mean, I can't remember who said it once, but basically they said if everyone loves your idea, it's probably not a great idea, because it means probably there's other people out there doing the same thing. If everyone hates your idea, that's probably not a good idea either, because really nobody likes it. But if actually it's in the sweet spot, and you get equal number of people kind of don't think it's cool, but an equal number think it's great, then that's you're probably onto something. But here comes a problem with venture capital, because I don't think that most venture capital VCs, especially in the UK, are anything to do with venture. I think they're growth capital businesses. And who inside an institution, which they're an employee of, who's going to stick their head above the wall and put a bet on something that's contrarian? They're not going to do that very often.
Could I just ask you to explain the difference between VCs and growth capital? I think that's an interesting point.
For me, it's in the name. You know, venture, you're on a bit of an adventure. You're about to do something that's never been done before. That's a 0 to 1 business. What, you really expect me to believe that people are going to rent a room out in their house to a stranger? I mean, that's the kind of quotes that Airbnb got, yeah? So that's a venture. You're taking a bet on something that you think, you believe in the team, you believe in the concept might work. Whereas growth capital is the VC, the classic conversation that most of us have when they go to see a VC was, show me your KPI, show me your unit economics. Well, if that's all working, yeah, we'll get behind it. Well, there's no bet there, there's no gamble there. You're not venturing anything. You already know the business works. Let's scale the business up. That's growth capital. And I think that actually, I don't think the VCs are necessarily best placed to get to be the best placed when it comes to unicorns. It's the people actually who take the bets earlier on, who actually take the biggest gamble. And I've seen that a lot of family offices, a lot of high net worths are actually starting to look at this. They're brave people, they're high net worth for a reason. They've taken big gambles in their own lives. They don't need to go to a committee to have a decision made for them, unless they're totally away from the management of the money, like someone like Richard Branson. They actually, they've done brave things. They've gone into Eastern Europe as it started to open up. They've built their empires, and they're the people, I think, that are starting to get behind some of the 0-1 to businesses, the contrarian ideas that don't need any proof points.
Can you name drop any? Well, I think that's what we're after at this point, is name dropping who's got the smart money, so we can watch them.
I think you just got to look at the list of some of the richest people in the world. You look at any billionaires, you find them in every country, whether it's Iceland or people there who have built their business in Eastern Europe, in breweries, and then in pharmaceuticals, or whether it's in this country, some people you haven't heard of before.
Can someone Google Iceland billionaires and tell us who Jason's really talking about, please? Cool, let's move on. Venture capital and where the smart money is going. Perhaps we'll take it down the panel.
Yeah. So if you look at the traditional venture capital, the traditional fintech, I think it's been milked and leveraged to the hilt as much as we could. So just applying technology to existing business models and bringing the last mile customer closer and getting rid of the intermediaries or middlemen. I think that model has been milked. So there's only so much you can grow further on that model. I think the new growth and the new unicorns are going to come from the intersection of futuristic technologies like the 4th industrial revolution, artificial intelligence, robotics, driverless, blockchain, a combination of these kind of futuristic technologies. And the smart money, definitely I'm seeing that the most successful cryptocurrency founders today, like Ethereum and so on, those guys are really smart and they're sitting on billions of capital. And also some of the successful VCs like Andreessen Horowitz, who made the right calls at the beginning of these phenomena, they have also started like $500 million funds and so on. So they're going to make some good bets, and a lot of people who have luckily become overnight billionaires like Binance CEO and so on. So they have the 360-degree view of what's going on in the market, and they're also able to spot some very nimble-footed entrepreneurs. So I think that's where you can expect to see the smart capital.
Yeah, I agree. Most of the serious early investment comes from high net worth individuals. There's a handful of VCs that I like Peter Thiel, Steve Jobs, and people like that. But most of those kind of VCs you don't get in to see unless you have introductions, which I think is kind of a shame about venture capital in general. And I agree that most of these, we get 4 or 5 VC calls a day, and usually they're what's your revenue growth rate and so on and so forth. And occasionally they'll call up and say, do you have anything in blockchain we can invest in? They don't really care what it is. And guys pestering me, do something with blockchain, and one idea after another. Eventually I had to kind of say, look, these are 3 criteria, because I refuse to do blockchain for blockchain's sake business. It's got to have an issue with trust, fraud, decentralization. It's got to have no trust in third party. It's got to be something that would have been really difficult to do without blockchain. Other than that, it's blockchain for blockchain's sake. So yeah, these guys are sheep and they like to hop on trends.
I would just say that there's a reshaping of the market taking place. VC is a relatively traditional way to raise money. Nowadays, people are essentially issuing their own equity, their own security, and you see that through an ICO, but you also see it through crowdfunding and rewards and all the rest of it. So the whole ecosystem developing, that's really going to move up that curve. But now, some of the biggest raises on ICOs are larger than a major raise on the London Stock Exchange. So I think of VC as very traditional and here today, but I think we're moving to a point where people are going to issue securities, not over just their equity, but their equipment, anything you can think of. They're securitizing everything they have. There's a general trend in the value of those securities and issues are getting very, very large, in the millions, in the tens of millions, hundreds of millions. So, smart money is going to be the crowd or everybody, because you'll be able to invest directly in those companies, and I think you'll find some people in the crowd are probably very, very smart, and they're going to invest, make great investments. It's just that traditionally, not what you do, but you're going to find stars within the general population who buy into all these different securities.
Yeah, we're very, very early in our funding at the moment, and so hopefully come November we could come back and tell you exactly the way to do it. Probably I'm not best placed to comment.
Cool, no problem, thank you. At this point, I think it'd be really interesting if we could express when we put our money where our mouth is. Would anyone like to share the investments they've made?
Obviously, when you're trying to build a 0 to 1 business, you put nearly everything into your own endeavor, which I'm sure most of us have who are involved in building their own startups. But, I think that I'm particularly interested in what's going on in the world at the minute. There's a lot of uncertainty. There seems to be terrible movement away from the support of our own environment that our children and grandchildren are going to live in. So I've put the little amount of money that I have not involved in Glint, I've put into green funds. So things that have an impact investments on the environment.
Cool. This has just reminded me of something I meant to say at the beginning. Please could everyone nod their heads in acknowledgement that you are aware this is not investment advice, etc., legal jargon, blah, blah, blah. Could everyone just give me a big nod? Yes, we get it. Thumbs up. Great. Okay. None of this is investment advice. They go up as well as down, etc. Thank you.
Yeah, similar to him, we also have a 1-year-old startup, so everything has been going there, and we are looking for fundraising ourselves. But yeah, I have a bit of investment in Bitcoin.
Yeah, and 98% plus of my net worth is in premonition, so I'm really motivated to make sure that applies. And I don't look at any other investments that I believe have high return capabilities because I don't think they're going to match what I'm going to do. And I look for, but conversely, it is a high risk investment. So I look for lower risk investments to balance that out. And like I don't own much real estate personally, so I bought a bunch of real estate trusts. I invested in some cryptocurrencies, not necessarily because I think they're going to go up, but I read enough about it that they have the potential to go up exponentially, and I believed I should put some money in as a hedge. And finally, I bought some shares in Tesla because that's about the closest thing I could get to betting on Elon Musk personally. I think it's not someone you want to bet against.
Cool. Well, I'm just very hands-on, so I invest in my own company and other projects I'm invested in. For me, I don't generally invest in other people's company, although I might give them my time.
I believe very much in putting your money where your mouth is. I've come across a few people in trying to raise funding, coming up with great ideas. I know some people aren't quite in the same financial situation. I made quite shrewd property investments years ago, so I've got that as a backing. But I think you've got to put and invest in yourself really to give it a full, wholehearted approach. Otherwise, spending somebody else's money could be a very easy come, easy go attitude to take.
Yeah, actually, there was another one I forgot about. I think as well, we're in a community here of people who are trying to, endeavour and be a little bit delusional about their success and going out and developing startups. And I met a gentleman who came from a company called Just Park. He set up a new business which is helping all those people that seem to be having an increasing number of people on the streets of London. It's called Beam. And I invested a little bit of money in that, and it's a way of allowing those people to get back on their feet by giving them the funding to, for instance, get some driving lessons so they can become an Uber driver, or whatever they need to be able to do to get back on their feet. It's called Beam, and again, for me, it's the impact it's having, not the profits that it's giving, that are important in that situation.
Nice. I think it's only fair if we turn this same question over to the audience and ask, what have you invested in? It'd be great if anybody's invested in interesting things. You want to share your experience with us? Anyone? Yeah, we got one here. Great. Come and meet me halfway.
My name is Emma Bendizire. I have invested in a research and development office, and the reason is that I realized that the market has crashed in 2008, and I was determined not to see the world facing that kind of transition anymore. So I have developed algorithms to trade the financial market. Actually, makes more profit when the crash happens. That's it.
You're going to be mobbed when we stop talking on the panel. Okay, anyone else? I just think it's really appropriate we listen to people who put their money where their mouth is. So this is a way of just flagging up who's in the room, who's got the courage of their convictions to go further than just come and talk and listen about these things. Anyone else want to mention how involved they are in investing, actually?
Well, I'm not terribly involved, but I have invested in some of the businesses which I advise. In fact, one is an African oil exploration and energy company. They aim to build solar power plants out of the proceeds of developing a gas field in Africa. Another is a white space, TV white space telco, and they're aiming to build a rural internet capability for rural Africa using TV white space. And the third one, also in South Africa, is a business to hopefully extract gold from mine dumps. It's the spoil heaps. Okay. And my role in all is they are trying to fund the businesses with ICOs, so I do ICO type consultancy. That's it.
Great, we've got a shout here, great. Have a think if you've invested in anything interesting that you think would be good to share.
I've invested in my in Surepel, which has done an ICO. I invested approximately 1.5 billion, and if ICO would not be successful, I would lose large part of that money. However, we raised 80 million.
Bravest man in the room. Cool. Has anyone else been investing? It's great to hear from those of you, and we can follow up and talk to you after. Any other investments? Do you mind passing this over?
My interest has been around the study of inequality, and over the last 15 years, I've been investing in various companies that look at social entrepreneurship and financial inclusion. 4 successful exits as of now. Not a lot of capital and obviously in each of these, but I also mentor startups. My name is Somi.
Cool, thank you. I should confess, I invested in something called Aquanautia, I think it is, on Kickstarter. They've invented swimming shorts with a pocket that keeps your phone dry when you swim. Anyone else? Kickstarter or different? It's been really, really interesting to see what people are actually doing, so I'd really encourage any point tonight, pop a hand up if you want to share that. It's a great experience for us who haven't been investing in whatever you're doing to learn about that, so thank you very much. At this point, I think we'll bring it back to the question. If in doubt, come back to the question. We're thinking about the next fintech unicorn, so at this point I think it'd be nice to hone in on that and consider fintech's quite a big area. There's a lot of sectors within that, so lending, payments, etc., whatever it may be, identity, security. I'd love to put it to the panel, which of these sectors do you think are not the safest, I'm not asking for investment advice, which of these sectors have the brightest future?
I think to become a unicorn, you've kind of got to solve a big problem, and you've got to solve it globally. I think that money is one of the biggest problems. I think it's broken, the way it's created, the way it's managed. And I think alternative currencies, as we've seen, obviously are one area where we'll continue to see innovation, and I think we'll continue to see some huge growth and new propositions. I think Bitcoin is just it's just the beginning of what's about to come out over the next couple of years. So I think alternative currencies personally is still got a big area.
Yeah, I would say the application of smart contracts to various business domains, for example, like legal domain, insurance domain, and any simple business logic that can be executed between different counterparties will tend to be more and more executed by smart contracts in the future. And I agree with you that the capital markets, the area of capital raising for companies or individuals is a big area which is going to be revolutionized by blockchain and cryptocurrencies, which is under-penetrated and is a huge growth of opportunity. That's why we are operating in that space.
Well, I've actually been thinking more about the qualities of a good fintech unicorn and what might describe that. I'm big on the idea, and I think the best ideas are obvious, though in retrospect Bitcoin was not. I think that the idea should solve a big problem, particularly a highly inefficient alternative, whether that's a government or business alternative. One of the things I think a lot about, in the States, when you sell your house, you pay 7% of a house value to a real estate broker. And basically they just slap it up on a website. It's nuts. And I do not understand why no one has disrupted those people. In fog and mirror, you can be a real estate broker in America. It should be highly efficient, so it's AI for X or AI plus X, highly automated, so blockchain, smart contracts, that kind of thing, with strong network effects, so you should API into everything. And lastly, it needs to be defensible, so it needs to be unique, and it needs to have a moat and various one or preferably several things that are barriers to entry which make it hard for someone else to come and do the same thing.
Okay, so I think that the unicorns or the most valuable companies we haven't even seen yet. I don't think I would say, Barclays has been around for 300 plus years. I guess many big banks have. Virtually everything we've seen in fintech in the last 5 years is nothing but really a regurgitation of what we've already had in finance. I challenge anyone to tell me anything that I can't summarize in conventional financial terms. What would that be?
Financial inclusion. I think what the panel's saying is really interesting. Sorry.
Hold on.
Never had financial inclusion. That's brand new. It's not.
Hold on. Intervention.
So what I remember that is the problem of financial exclusion and the poverty premium, and the idea that within banking, this is my sort of point in my company, the idea that for certain communities, banking and having a bank account was a luxury. So the first bank account, which opened in the 16th century in Amsterdam, and the idea that merchants had these bank accounts were for many a luxury. Many generations in this country of 26 million came from immigrant backgrounds, and also look at the Windrush. So the idea that, I think my issue is that financial exclusion is a massive problem, and that company that nails that will be the next billion unicorn.
I remember when I first met Eddie, was 4 years ago, and you said something to me which I'll never forget. Every time you tell me something interesting. No, I'm not going to talk about that. It won't be that. You said that most of these companies are basically looking at digitizing existing processes. And so we do X, Y, and Z in the real world, so let's just digitize it. But where real disruption and innovation comes from is when someone can do a completely new process or reimagine a completely new way of doing it that just wasn't possible before. So I just want to give you props for a good idea.
Thank you. So what I was going to say was we've had about 5 years of fintech, and all it's really done is create huge awareness. When we started in 2011, banks didn't even talk about fintech. Bitcoin had never been mentioned. Today we have Project Innovate Sandbox, all this kind of stuff. Every bank's got an accelerator, blah, 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 blah. But it's essentially a kind of 1.0. Almost every company, or virtually every company, it's hard to think of anything novel. Okay, financial inclusion is not novel. There's lots of people working on that, and that's driven more by things like access to wireless networks and M-Pesa than it's driven by anyone else, really. The pushing the internet out there, and that's going to happen anyway. What we haven't yet seen are totally deconstructed concepts where people, so we can make the existing financial system a bit more efficient. The banks will pull their socks up and probably launch their own more efficient processes too. But it's still the same old finance. And that hasn't been deconstructed yet. So real disruption will come when people really deconstruct that and really rethink it. And you start to get genuinely novel things, and we haven't really had that yet. So those are the ones that I think are worth my money. I mean, unicorn sounds like it's a lot of money if you find it in a suitcase on your bed, right? But it's nothing. The market cap of a major bank would be in the hundreds of billions. Big deal. What's $1 billion really when you're dealing with companies worth in the trillions? I mean, who cares? So that's not a big deal. Actually, fintech's had a relatively tiny effect on the global financial services industry. It's really just scratched the surface. And banks are in on it too, and they have a lot more resource than most fintechs. So we haven't really seen heavy disruption yet. But I think we will when we start to see people completely deconstructing. I'm looking at Pascal over there. That's actually quite new, what he does with PhotoCert. Well, he certified photographs. So those sorts of things are new, but they're on the periphery. What you're not seeing is major deconstruction, major reconstruction, and rethinking in the new medium. The difference is going from offline to digital. We still now have digital versions of essentially the offline products. We're offering people essentially bank statements and transfers and payments and FX. Well, we have those today. You're just giving us a slightly more efficient digital version of the existing product. So the ones I think will really win are the people who totally transcend that and completely deconstruct and rethink totally new ways of doing things that we probably don't have right now that really leverage the medium.
Yeah, I just add with exactly what Eddie said and what was said at the end earlier about, I think there's so many young, smart brains around now. The lovely thing about the financial market is that it is becoming so global. It is absolutely massive, and the ability for people to purchase and correspond with everybody from the rest of the world makes finance a really, really interesting project. And I really think the disruption hasn't come yet, but it's there somewhere.
I mean, I think it will emerge. What we have now because I was in this, before it was called Fintech, what we now have is this huge global R&D department. I mean, I'm a blockchain skeptic. I think most of it's not very interesting. But you have got 1 million people working on stuff. What happens is stuff emerges out of all that activity and investment that maybe none of us really expected. So you have a huge global R&D department. Stuff will happen. People will discover things. And the thing that just dropped to mind is something as simple as in-chat payments. Something you probably take for granted now. But when that first happened, chat companies were not doing payments, and then they realized they could. And then they realized actually you can hold money without even having a bank account because you're holding it in your chat account. You could effectively come off the grid and operate. So you get these little things happening. I mean, blockchain is quite pervasive, but it's essentially about the internet of record and recording everything. It's quite immature at the moment, but virtual currencies, everything else. A lot of it, most half ICOs, shut down after 120 days. It's something like some figure. I mean, most of them just shut down, but there are quite a few who go on. You're going to see emerging out of that new stuff. So I don't think it's happened yet either. And I think that we're only talking about 5 years, so maybe it's another 5 or 10 years and it gets really sexy. And then it starts to replace all this stuff with something that we would think is sort of space age.
Cool, so we're just about to come to all your questions, so I hope you've got some questions in your minds. Before we do that, I'm slightly going to pull the panel up, because I don't think anyone actually answered that. The question was around which sectors within fintech are likely to see the most interesting growth, and those sectors, whether it's something like payments or security or identity, those things are kind of eternal. The question was around which of these sectors we can expect to see the most growth.
One is foreign exchange, of course.
It's a new sector that hasn't emerged yet.
I want to say security tokens are the next wave, next big $1 trillion wave. The securities market globally is like $86 trillion, and the whole blockchain industry has only been touching a few $billion. So when blockchain really goes mainstream, that means the world's entrepreneurs from every company, every industry, regardless of their knowledge of token economy or the blockchain, will be able to use these in the financial services infrastructure, and that will be blockchain really going mainstream. And I also want to give a concrete example to the hypothesis that you mentioned earlier, that the banks are only preserving status quo and not really re-architecting the prior processes and not doing any disruptive stuff, which I agree. One of the concrete examples is in stock exchanges. So the stock exchanges were one of the first entities to believe in blockchain and to invest in blockchain technology by putting in some $50 million in companies like Chain and so on. And this was way back in 2014, even before Ethereum was invented. And then 4 years down the line, the stock exchanges realized that blockchain can have phenomenal impact on their processes, and they have mandated companies like digital asset holdings to do some processes and stuff. But that is exactly in keeping with what you said. It's just digitizing their existing processes when they're staring at the elephant in the room, where the smart contracts and blockchain can completely re-architect the process and completely remove entire layers of intermediaries like settlement, custodians, depositories. So all this architecture is not at all required. And the concrete examples are Hong Kong Stock Exchange, Australian Stock Exchange. Some of the biggest stock exchanges, when they make a headline and a press release saying we are introducing blockchain, all they're doing is starting a smaller outfit and reducing the criteria, the threshold size for the companies before they go for listing, and creating a smaller pipeline. But it has nothing to do with blockchain and what the smart contracts can do.
So the New York Stock Exchange has got a blockchain on the side that they feed the data into and leave it there so they can say they're using blockchain. It's frankly bullshit. Don't quote me on that on your camera. Technical term if you're a computer scientist, okay? Look, what's happening here is... Okay, so... You've confused me almost. Look, the thing about... Yeah, what's happening with security tokens is generally opening up a new market because it will allow a business... It doesn't really require blockchain, but it just requires a ledger to securitize. If you want to securitize something today and you go to Goldman's, you need a $300 million building. It's probably not even enough. they need to take about 25% of that. You know, it's too big. Nobody can micro-securitize. What this will allow you to do is to unlock assets. So you have a business, you can maybe securitize £1,000 or whatever it might be. But again, it's people issuing securities. You're seeing a democratization, where previously an investment bank had to securitize a big building, and now you're seeing it becoming available to anyone to issue a token to securitize maybe their pub. You know, that unlocks value and creates a liquid market that didn't exist there before. So that's kind of disruptive. That's interesting, I think. That type of thing is what we'll start to see, but it's not mature enough yet, I don't think, to do it. The other thing about digital asset holdings, sorry, just I don't want to talk too much, is forget the blockchain. Look, if you take all the banks here today and you rationalize their infrastructure with Oracle databases, trust me, you'll save $100 billion, okay? You don't need blockchain to do that. If you just rationalize every completely separate copy of everything that all banks hold, because they've got a not invented here thing, call it blockchain, call it whatever, you'll rationalize it out. So digital asset holdings will definitely make money. Because blockchain or not, if you just restructure banking infrastructure into a common standard, bingo, you'd save about 50 billion quid or something.
Yeah, but they're not really using blockchain.
They're not really using blockchain, but it's a good thing that banks standardize. I mean, today Azure will hold a complete set of all market data. When I was at Citi, you know, they wrote their own word processor because they didn't trust anyone. The not invented here was so strong. They wrote their own word processor, for God's sake. Today, and they had their own data centers with armed guards and things. You know, today, the banks will actually put the data in the cloud. They'll share information. You know, that's to take out costs in that infrastructure. Doesn't matter how you do it, you'll save billions doing that. And so DH will definitely be successful because there's a lot of fat to take out of that infrastructure. Okay, well, they won't go into large, but you know, there's a lot of fat to take out.
I'm from outside the financial industry, and I come into it, I like to look at the basics. And, you know, if I was fortunate enough for any of you to do some work for me, then I would owe you one, wouldn't I? Yeah, I would owe you. And that, I think, is what money is. Money is the ledger of people's promises to each other, because we can't be trusted to kind of keep each other good about what we owe each other, so we have money. And why should my money, my promise to you, be worth less next year than it is this year? And so for me, the foundation of the whole entire financial monetary system is broken. So let's not just talk about what we can do to make things efficient or whatever. It's broken. That's why people got behind the whole Bitcoin cryptocurrency phenomenon. That's why we're involved in looking at gold and how can that be used to solve the problem. Let's not look at the kind of small things, let's look at the big things that are causing real problems in our society. The gap between the rich and the poor is increasing because of misallocation of resources, because let's be honest, we're talking about investing in businesses today here. We belong to the very top in society who can and do think about investing in businesses. I hope crowdfunding changes that. But that's why the stock market has gone away with itself. It's at valuations that are way beyond it's ever been before. It's why the rich are getting richer, the poor are getting poorer. It's this whole monetary system that's broken, and that's what needs to get fixed first. And the people who fix that, I think, are going to do the world a great favour and certainly be one of the biggest unicorns we've seen.
Well, let's hand it over to the people who are going to fix all that. Questions, folks? Time for some questions before we wrap up. Just a bit of time left. You spent all your good questions already. No more left. Excellent.
In response to the question about which sectors will see great growth, I was looking at whether supply chain would be getting any highlight, whether that is supply chain for finished goods or consumer products or anything. So any insights from the panel would be great help.
Okay, folks, did you get that?
For fear of speaking too much, I think every sector in financial services right now is being upgraded to the very latest, greatest tech. Supply chain is still an old sector that thinks in a certain way of a certain framework of having a chain of suppliers. So where there's a certain structure to it. Well, I think all of that will get upgraded. What's interesting is new sectors that deliver the same service in other ways. And I'm just thinking of that thing in the food industry, which is farm to fork, where they disintermediate the value chain and they do other things. I know somebody who was doing an ICO like Coin to get around that and actually deconstruct that value chain, the food value chain, to get rid of those structures and those rigid structures within that chain. So that's what I'm guessing is going to happen.
Yeah, sure. So being in the blockchain space, I have seen a lot of blockchain companies. In fact, the early ones look back from 2012 and 13 being supply chain, and now a recent spate of ICOs also in supply chain, raising $50-60 million. And some of them are also directly connecting the farm produce to the ultimate consumers by getting rid of warehouses and so on. I also want to shed light on another interesting observation I have made, that since the smartphone era began, disruption is no longer spotting a problem and solving it, because that was in the past. Now disruption is what Elon Musk is doing, what Google is doing, what Ethereum did, thinking ahead of the entire generation, creating something and then worry about the applications later. So that's what Google invested in, like driverless cars and AI and all those things. And now Elon Musk thinking about going to Mars and colonizing space and so on. So I think the next gen disruption will happen not from solving existing problems, but thinking ahead of ourselves, because technology has been progressing so rapidly that I think the current problems will get solved on their own. We need to be thinking ahead of the problems.
Cool. So putting questions out there, priority is to new hands going up.
Chap over there.
Cool.
Has anyone thought about quantum computing and how that will affect things?
Yeah.
Quantum computing. Anyone interested?
I mean, I'm quite into quantum computing. I mean, I think it's going to open up, and forget the cracking codes and ciphers and stuff. It's going to allow us to model things that we were never able to model before on a classical computer. And the ones I'm thinking of are things like, well, I know some applications in medicine. So, for example, in analysing DNA and simulating molecules within the body and so on. On a classical computer, you can barely simulate a small molecule. On a quantum computer, you'd be able to simulate a cell or something of that sort. So I think what it will bring is massive learning about things we just haven't been able to reach so far with our classical computers. And I think that opens up, who knows what, a whole world we probably can't even imagine.
Yeah, I started off my career actually in virtual reality back when the first time it was cool, back in the early 90s. And all a bit ahead of our time. The processing powers weren't anything up to what was required. And I think the dawn of being able to process in multiple dimensions with quantum computers mean that maybe the investment that Facebook made in VR comes to massive fruition. The thought that actually we could enter virtual environments and new worlds which are rendered to clarity that compares with real vision that we have in this world is going to completely change our world forever.
Excellent, thank you. So, I am hoping that you have all got what you came here for tonight. If anyone is feeling for any reason they did not get what they came here for tonight, this is your chance. Put a question in, make sure you get what you came for. Anyone else for the final question? Furthest corner, of course.
It's the first time I've attended one of these events, so you have to we're talking
Closer. Closer.
But in view that we're talking about fintechs, we're in view of talking about unicorns, and the amount of money associated with unicorns is what, £1 billion? My understanding is what, 279 unicorns in existence, 5 of which probably make up Airbnb and one other. Do you think there's too much money floating around for people to play with that is not necessarily audited?
You mean like black market money? What do you mean? Yeah, bad money.
So you have a number of crowdfunding platforms that people sign up to. So myself, Steve Cozens, I happen to work in this institution around us, whereby I can go to any number of platforms I can sign up to. I can call myself an investor. I have some money, so it could be between 50p to £1 million. I can go in and I can invest in what I would call speculative activities. And I think we were talking about values of organisations. It's speculative. So I go on AIM, you mentioned companies, let's take a forward, which is marijuana. They are based on the ability to create a new industry in the future. So if you look at the Canadian market, they have the ability to grow marijuana in Malta, and how that then carries itself across. Those are speculative things on the basis that the industry, the dynamics are changing over time. But when we talk about fintech, we're talking about people putting money forward, which is equivalent to AIM, but is it actually registered? Is it actually monitored? Is somebody like me going to get my money back? No. But who actually is looking after all of these lovely people that have that aspiration to invest in the applications that have been demonstrated to them?
So crowdfunding is a regulated activity in the UK. Okay, so the FCA is looking out, but not in the way. So there are different structures around investment. So crowdfunding is where the investor just invests directly in the company or through a vehicle, but there isn't. So an investment bank doing the same thing would typically have an SPV to hold the investors' shares. They would have somebody on the board to provide governance. It's a much higher level of governance, but there's a much bigger ticket size to do that. If you're raising 300 grand, you can't hire somebody for 100 grand to sit on the board and watch the money from the investors. The only crowdfunding platform I know that does that is Syndicate Room, where they insist you have a lead angel with the same share classes as the crowd who's on the board, which is a kind of, if you know the investment banking model, is kind of trying to emulate the investment banking model to ensure there's some kind of governance. But it is a regulated activity, so they can't just run off with the money, if that's what you're saying. You know, it's a control function, they have to be authorised, they can't just steal. Is that what you mean?
Sorry, I'm going to interrupt and suggest this is a conversation to follow on after. It sounds more in depth than is suitable for the whole room. One final short one.
Hi, thanks. First time at this event. I came here to find out whether there was a unicorn, but I heard that you guys are comparing it to the Airbnbs, to the Ubers, and I haven't seen, you haven't talked about a fintech unicorn at all. We've also talked about perhaps unicorns based on evaluations that are localized pretty much in the US or in UK or in Europe. You raised the issue of 27 of them being in the world and only a few being here in Europe. Is that truly a fintech that is global, just like the Facebook, the Google, that went across markets, across borders? And is that one now?
I've got an infographic printed out I can give you later about who they are and where they are, but if the panel would like to wrap up, consider it your tombstone moment, because this is the final comment from each of our panelists.
Well, in London, of course, we do have some fintech unicorns, and it's my understanding that they are starting to expand into other territories globally. Of course, with fintech, you have regulatory frameworks around the world that you have to navigate. You have partners like people like MasterCard and stuff you have to navigate with, and so that progress is not necessarily as fast as it was if, for instance, you developed the latest new search engine that could go global. I mean, obviously, I would say this, I know we believe that we're on track to become a unicorn one day. You know, we've done 2 rounds of funding now. Each time our valuation's doubled. It's doubled again this Series A, which just started. And I think with the distribution deals we've got in new territories with our issuing capabilities in new regions around the world, we have the ability to onboard quite a lot of customers in at least 2 other regions on the planet within the next year. So we'll be targeting maybe not quite unicorn status next year, but we'll be well on our way. I think the challenge with the fintech unicorns is definitely around the regulatory sludge that you have to get through.
And you forgot to mention your crowdfunding starts tomorrow at that point.
Yeah, with CrowdQ.
Hi. I want to be brave and put up our own platform, Himalaya Capital Exchange, as a watch list for one of the upcoming unicorns. I believe there are very few ideas left which have the potential for market networks, and we have found a sweet spot in the capital market sector. So we are trying to disintermediate investment banks, which have always been mandatory for traditional capital raising. Whenever a company goes and raises capital, investment bank is definitely in the picture, and you ought to pay 7 to 10% of fees to the bank. So here with the prospect of the tech stack and the smart contracts, we want to find a way where companies can self-issue securities and not necessarily securitizing. Securitizing is different from issuing securities like shares and bonds. Companies can self-determine the prices of these securities and also issue these securities on the blockchain and interact directly with the investors. Just like it is happening in ICOs, the only difference being these are now legal regulated securities which are accorded the same safety as the regulated shares, for example. So this thing has been under-tapped and not been touched upon in the entire blockchain revolution. So we want to be the early adventurous ones to take on this space and build a marketplace network and go the whole hog. So the future is very exciting for us.
Now, I think digital businesses are very easy to scale globally. For us, it's a data business. So if we want to get into a new country, recently we did in Chile last week, we just go and download the Chilean court data and it works with our system, and we bang out a press release, and then 20 people call up and say, yeah, I'd like to be your partner in Chile. So it's been fairly easy for us to expand in Brazil, Canada, Ireland, UK, Netherlands, Australia, New Zealand. It's a reasonably quick and easy thing because it's just data.
I'll just say I think we've had round one of Fintech, which has lasted probably from about 2012 to 2017. I think we're just entering round two, and I think there's a lot more to come. I think what you see is nothing more than pulling up your socks and encoding old systems into new systems and some improvements or whatever. But I think there's a lot more to come. I think it's going to be a lot more exciting. I think perhaps we have 15 or 20 years more of this before it's all done, basically. Think about media and new media. You know, new media is kind of done now. We don't talk about new media, we just do it because the media is digital. Banking or finance, a bit like that. So we're still in transition. I just think there's a lot more to come. I think it's going to be a lot more exciting. And I think some of these new companies could dwarf unicorns. You know, they can be huge.
Yes, I think you say that there's 5 in the UK, in Europe now. I know everybody's trying to get a bit of the financial market, and I know nobody said it tonight, but that dreaded Brexit word comes along. I know Germany and France are trying to push their markets, but I'm pretty convinced that it's going to be here in London. And as Toby said, what's great about globalization is the ability in the digital age to expand into those areas very, very quickly. And so I think it will be something that goes really global, really quickly, that will happen.
You want the microphone?
Okay, that is it, folks. We've got a few people to thank, so particularly Z, thank you for organising, Tom, and the Next Big Thing gang, and everyone at Lloyds Banking Group for hosting us. Massive, massive thank you. Of course, a big thank you to all of you. When you build your unicorns, please do come back and see us. We'd love to hear from you again, hear how that journey went for you. Keep an eye out for the We Are Fintech events on the Meetup group. The video has been made tonight. It's available on the We Are Fintech. Is it We Are Fintech or Fintech for Good YouTube channel?
Fintech for Good.
Fintech for Good YouTube channel, so you can watch this back again at your own pleasure. Massive, massive thank you to all of you, especially for the interesting questions.